This is Mark Warner with PropertyMortgageInvestment.com and wanted to comment on the real estate industry as it relates to bust and boom, or boom and bust in the real estate industry. There was an interesting article that was found in Business Week as reported by Bloomberg based on some research that Citigroup had done. And Citigroup had looked at various countries around the world compared to the United States real estate as a ratio to gross domestic product, and compared it to 2 to 8%. In the heyday in Japan back in the 1970, between 1970 and 1980, actually closer to 1980, Japan's real estate had an 8.7% of gross domestic product. Once it hit that peak, it had a precipitous fall within a 10-year period, and it dropped to 5%. Japan now sits at slightly over 2%, like the United States does currently. China, when they started to track China just before the year 2000, real estate as a percentage of gross domestic product was around 2% and has steadily climbed to 6%. Which means, according to Bloomberg and Citigroup, it looks like China's bubble may be about ready to burst. U.S., on the other hand, has been tracked for a long time and has hovered around the 4 to 5% level, but when it peaked at slightly after the year 2000, it got to a high of 6% before its bubble has burst. But what's happened is the gross domestic product related to real estate has dropped to 2%, which means to me is it's a fantastic time to buy real estate, and the prices are depressed, and thus giving investors who want to look for real estate a tremendous opportunity on the upside as the real estate product compared to domestic product increases over time. So it's a great opportunity. If you would like to comment about this video post, you can write to us at askpmi@PropertyMortgageInvestment.com. And this is Mark Warner with PropertyMortgageInvestment.com.